Okay, recording this video Saturday 22nd of February 2014. Hope you had a good week's trading. Hope you're having a good weekend. And time to do an update of the global macro charts. And finally we've got some good numbers coming out of TradeStation with commitment of traders. They had some problems about a month ago with some of the numbers kind of not updating. It was kind of messing up some of my analysis. Now we've had 3 or 4 weeks of good kind of numbers coming out, and the picture is becoming a lot clearer. We can see exactly what's kind of going on, whether the professionals are supporting some of these moves or not. And broadly speaking, the big picture is weakness coming in the USD and starting to show in a lot of the foreign exchange markets, the currency markets. So we've got the pound, the euro, the yen all strengthening, and gold and silver kind of taking off, crude oil potentially taking off. And I see a correction happening in the equities market. I think we're set up for that. I think Monday, Tuesday into Wednesday is going to be extremely important. So hold on to your hats. I might do a separate video on that kind of quickly. But anyway, let's go through the currency charts first. So this is the usual setup that I'm using for my global macro charts. I've got daily and weekly charts kind of side by side. We've got the better indicators on both charts. We've got better sine wave with support and resistance lines. We've got better momentum showing the buying and selling going on, and then we've got better pro-am showing the amateurs and the professionals and what they're up to. And then the second set of charts is to do with commitment of traders. So the commitment of traders numbers, you all know, comes out just weekly, so we show that on a weekly chart, and then you can see the longer term picture against a monthly chart. I take commitment of traders numbers, I flip them upside down because that's the way they kind of move better with the market, and I'm looking for divergence patterns and confirmation that the professionals are supporting a move. So here we go. First of all, with the yen, we've had this very long kind of bottoming process happening in the yen over the last couple of months, and finally we're getting fruition. What we're doing at the moment is just what I call running out the clock. We've got a pullback to end of trend to make here on the daily chart of the yen, and you can see better sine wave is just kind of heading down towards that cross. It's been it was a really strong short covering rally here. The move back down has been incredibly weak. We've hardly traveled any distance at all. We're not getting down to the 95 type level. We're only cresting into the 97 level here. So all we're doing is just waiting. I'm not sure this is going to actually run out, whether we're going to actually get that final cross, because this was an amateur down bar on Friday. I could easily see this thing kind of jumping in the next couple of days with a blue professional bar kind of taking us up through 98, 99s and getting this thing going into an uptrend. You know, on the weekly chart, which we're using for trend, we've had all the good stuff kind of come in. Exhaustion selling, first bullish divergence. Pullback to end of trend, we had a second cyclical turn after end of trend. Because that wasn't quite enough here, we had to wait for the bullish divergence to come in, and there we go. We've got Rambo patterns at the bottoms, professionals kind of taking it up, and this was a short covering rally here with explosive volume kind of going on, and this is just amateur down bar testing stuff. So we're ready to crack. I'm just waiting for this thing to pop. Whether it makes a cyclical support at some time in the next week, don't know, but you know, just watch out if we get a really strong day or two in the yen, you know, taking this thing and it just kind of explodes to the upside. So, and that kind of contributes to short covering, to carry trade unwind type stuff, where we're potentially kind of helping an unwind and a sell-off in equities. In terms of what the commitment of traders is doing over the last 2 or 3 weeks, you can see we're starting to wrap around here. So we've got professionals starting to support a move up in the yen. These are really kind of low levels, you know, extreme levels here. We're at 50 in terms of what the professionals are doing with the open interest and commitment of traders. So you know, this is, I mean, it's definitely kind of down for the yen. I'm not suggesting we're going to rocket into, you know, testing, you know, this 130 level in the yen. That's not what I'm saying. I'm just saying we're oversold. We're going to come back into this kind of an area. So and potentially we're kind of set up ready to make that move. Euro, we're starting to break into an uptrend, so we're breaking above cyclical resistance on the daily chart. These blue professional down bar, you can see coming in at these lows, 135. They've held. We've cracked above the top of this kind of professional range. It was like this widening trumpet kind of looking pattern here. We're now breaking above the highs of that. We had a little bit of weakness after a Rambo pattern here, just showing the amateurs kind of, you know, getting a little bit too excited. We're coming back. Could see us this week kind of cracking up through 138. So we're breaking into an uptrend here. On the weekly chart, we broke into an uptrend. We've got cyclical support, pullback in an uptrend kind of gone on. So we got cyclical support going on the weekly chart. We had very weak selling kind of going on here. This last move was flushing out. The last of the sellers with a flushing out pattern here. So we've got things in place for the euro to start to strengthen. In terms of what the professionals are doing, they're kind of neutral at the moment. I could see this thing kind of going a little bit positive over the next couple of weeks as this thing starts to advance. The pound has been the stronger one that's really kind of broken out. I hope everybody's kind of being very clear on what I've said in the pound over the last 3 or 4 months. So we broke into an uptrend above resistance here on the weekly chart. We had a little bit of profit taking. We've pulled back to end of trend and exhaustion buying, but this thing isn't over until we see exhaustion buying on a left shoulder on the weekly chart. So we're still heading up on this chart. This exhaustion buying was getting the move going, so we've got to see a similar type pattern on the way up at the highs. And we're sitting under, we're breaking up to kind of new annual highs and so on. And another exhaustion pattern here. Until we start to see bearish divergence, that's when you see kind of weakness. So after a bearish divergence, we kind of go nowhere for a while. This time showing the strength of the buying each time kind of going on. So I think this is going to continue. And you look at commitment of traders, the commitment of traders has been very solid here for the last couple of months, showing us the way that we set it up from bearish bullish divergence here on a monthly chart here. Now we're kind of breaking up. This is the kind of the strength in the pound, and we're moving above to multi-year highs here. And again, just to reiterate, been pretty positive on the pound for months and months, and so this is just continuing that story. Now, so those are kind of the major currencies: yen, euro, pound. On the kind of commodity-based currencies, on the Aussie and the Canadian, they're looking stronger, and we're looking like a little bit of short covering rally, but the commitment of traders is not supporting a really big move in these currencies. So I just think we're just going to have a little bit of kind of strength, but nothing much. Daily chart pullback to end of trends gone off with exhaustion selling kind of down here. We haven't had blue professional bars kind of really pick up the lows, and that's why I don't think the Aussie dollar, the move on the downside, all we're doing is just correcting off this kind of, we've moved so far. We moved from the parity level all the way down to 87s kind of down here. So we moved so far in this, we've got to have some kind of profit taking, a little bit of double bottoming type activity, and the professionals will come back in where they kind of sold it down. So we could see a little bit of strength in the Aussie dollar, but if you look at commitment of traders, really there's nothing kind of showing that the professionals are really supporting a big kind of rally in the Aussie. So now Canadian dollar, similar picture. We had this, I said when we had this Rambo pattern and bullish divergence, wait for a little bit of strength kind of come in, but this down move is not over because we're below cyclical support. We're broken into another downtrend here. We've got to make pullback to end of trend. You can see there's the pullback come in. This move happened so quickly on the Wednesday that the pullbacks kind of signaled a little bit late. Would have been great there, at the 91 levels. It's coming in a little bit later, and we just bounced. We had quite a lot of strength there. You can see the close on Friday is quite high, but really we're just bouncing off that kind of previous low here. Got to put in our pullback to end of trend. Again, same thing. I've not seen exhaustion selling on a left shoulder on the weekly chart. The commitment of traders, again, still not supporting a real strong rally in the Canadian dollar. So the commodity currencies are really weak at the moment. So we might have a little bit of strength if the US dollar kind of sells down, but I think it's going to be short-lived. The real strong currencies are euro, pound, and yen starting to roll around, and those make the biggest components of the dollar index. So here's the dollar index. We're under cyclical resistance on the weekly chart. We've got this to play out, resistance to support. We've got this really weak kind of buying with bearish divergence kind of comes in here. We've broken below cyclical support on the daily chart here, having put in first bearish divergence and a flush pattern. The 79.5 level is absolutely key kind of down here. I could see us cracking through here. I know we've got cyclical support in due at some point on the weekly chart, but we're itching to break into a downside move here. It's not like the professionals have picked it up down here yet. The only thing that's a little bit not going in my favor in terms of that analysis, dollar index on commitment of traders is not negative yet. It's not even on the zero line, so it's still a little bit positive. So if we see weakness, maybe the commitment of traders will kind of catch up on dollar index. Certainly, it's not a strong position here, and because it's the inverse of the yen, euro, and pound. If those things continue to strengthen, we will get weakness in dollar index. But that commitment of traders just doesn't quite go with it yet. But anyway, so weakness in USD, strength in most of those major currencies except the commodity currencies, which I don't see as being kind of long-term strong. but because the weakness in the USD means that gold and silver are rallying. So this week, was the last 2 weeks basically has been the rally in gold and silver. Weekly chart, all the good things, blue professional bars kind of coming in at the lows, first bullish divergence, pullback to end of trend, Rambo pattern right at the lows, bang. And we didn't put in another pullback to end of trend, didn't go that way. It was very weak selling, just kind of crested below here, the blue professional, the lows of those blue professional bars coming in there, bang, we broke to the upside. So gold setting off into an uptrend. This is exhaustion buying, getting the move going. That's not ending the move. So this thing is going to start, a rally for a period of time, and you can see commitment of traders now nicely kind of coming along with the ride here. So they're supporting this continued breakout or uptrend move in gold. Silver, same picture, prettier in terms of a pullback to dirty end of trend with a flush pattern here. Same thing, pullback to end of trend on the weekly chart. All the good things, blue professional bars, exhaustion selling, bullish divergence. We wait for price confirmation, pullback to end of trend. Another little Rambo pattern just hidden there behind that flush signal. Bang, we set off to the upside, blue professional bars, getting this thing going. Jumping the creek. I said after that jumping the creek bar we were not going back. It's like we're not going to test back down to the bottom of that blue professional bar. No way. It's like they'd got us that far, they'd done it quickly, and we were just going to keep on going. So we've held at those highs. We're going through 22 next week. Dollar index is going down, silver and gold are going up. And again, that exhaustion buying pattern, that's just getting the move going. We're just breaking out of this congestion zone. We're going places. And then silver on the commitment of traders again, now supported by the professionals. So equities. So if the money is starting to flow out, of the USD flowing into these other currencies, some of that's carry trade. Some of it is kind of just repatriation of funds. We got this interesting kind of test back up on the E-mini into the 1840s, 50s. So Christmas, Rambo patterns up here. We had our first sell-off. This was the first sell-off in January. We came back. We bounced all the way back. We bounced up into the 40s, and this time around we cannot get through. We'll know Monday, Tuesday. Friday certainly we dropped through the cyclical support on the 4,500 tip bar chart. That was the first sign of weakness on these high time frame charts. That was not good. So that was showing that they were kind of couldn't push it forward on Friday, and we dropped through a support. So we've got a little trend move happening there. They need to hold this thing on Monday or Tuesday. If they do not hold it, we're not going to look back. We're not going to go into the 40s again. We're going to go down. We've got cyclical resistance kind of coming in. It's at this highs. We've touched it once. The Christmas rally, we touched it again during January. We had no demand happening here, and that's why we fell off the last time into this big trending move. We've come all the way back up. I'm sorry, it's just really weak. If you look at better momentum on the weekly chart, we're barely above the zero mark here. So this is just showing a lack of demand here. The forces that be know this. They know this is the line in the sand. It's like they've got to push it through up at these 40s levels into a new uptrend. If they can't get it through there, everybody will see that weakness and it'll go the other way. So we're just waiting for this cyclical turn. It's due. I think Monday's going to be an interesting day. My guess is we're going to continue on the move down on the 4,500 chart. But if they pick it up, in the next couple of days and force it back, then we're on to another rally session. But let's wait and see. In terms of the E-mini, now this is why things have changed from the end of last year. So in the end of last year, first of all, we had the carry trade was starting to unwind because we had yen strength coming in. The second thing is we had strength in bonds. So they were reallocating funds from equities to bonds. So those two macro changes changed the story. Last year, the last 6 months of last year was all about the Fed, and you could do no wrong just to go long all the time. That's now in question because the Fed's unwinding. We also have the carry trade unwinds, and we have moves into equities. And then here's the other side of the picture: commitment of traders. Bang! The last 3 weeks, negative, negative, negative. Okay, so this has flipped the other way. The last year during 2013, any little dips that we had, we bounced back pretty quickly from these. Now we've had 3 kind of down weeks kind of here. We do not have professional support at the moment for a rally back into the 40s and 50s. So that's what's different. We're also setting ourselves up, let's see, over the next several weeks to another crash warning. The Crash warnings set off by these little negative prints here where we go back above the zero line, negative print going back above the zero line. The reason why these did not work out was because we just kept strong. After we had those moves back above zero, we kept strong. If you look back at the history of all the crash warning patterns, when these things go off and then we immediately keep going negative, again, those are the good signals. Those are the ones that work out kind of straight away. These ones, when we went negative and bounced back, we kept above zero. So those did not work. This one, in the next several weeks, let's see if we get another crash warning. But the first thing is we got this cyclical resistance that we got to play out, and let's see how Monday, Tuesday kind of works out. So, preempting myself, if I'm going to do a video on the E-mini, just look at some other things kind of going on. But that's kind of bigger picture, and we've got money running out of USD into other currencies. So bonds, and this is where they're flowing. They're flowing into bonds. We've broken into an uptrend. Breakup above resistance on the daily chart here. We're above support on the weekly chart, kind of going places. This was little 129, bang, they took it to the upside, we kept on going. We could, the thing we bounced off here, it's not a nice kind of blue professional bars at the lows. We're bouncing off amateurs kind of going short, kind of down here. So this kind of ranging activity, these blue professional bars here are absolutely key. We need to keep advancing here. If this was just profit taking, we're kind of rolling off and going beneath 131, then maybe that was just a temporary move into bonds, and we're caught by cyclical resistance here and we kind of roll over. I don't think so, because commitment of traders is supporting this breakout in bonds. We've got bullish divergence kind of going in on the monthly chart here. We've got them on the weekly chart. We're above zero on the 30-year bonds. The 10 is kind of less so, and the 5 is very kind of neutral. This is the strongest of the bond markets, the long-term bond markets, rather than the shorter dated ones. But this is supporting this continued move into uptrend in bonds. So into bonds, out of equities. Then crude, and because of the weakness in dollar index and USD, crude is going up. So crude, I missed a re-entry into this kind of long trade. I was long. I took a loss on my crude long trade. I was just way too late into the breakdown, into the uptrend. We kind of came back, tested into the 92s, pull back, dirty end of trend, flush pattern here. We've broken into an uptrend, and again, this is supported by. I mean, look at this. This is just like gold was. Gold was exactly like this in 2000. This is what gold was looking like. It was just above the zero line with commitment of traders, and I'm thinking, crude kind of takes off above 100 and just never looks back for a decade, and it's all about lack of resources and too many people on the planet. So I mean, this is extraordinary, the kind of strength that we got kind of here in crude. So that's supporting this breakout in crude into an uptrend and the weakness in dollar index. Lastly, copper. You'd have thought, well, copper is a similar kind of metal to crude, except it's kind of manufacturing based. It kind of strength is based on kind of economic activity, global economic activity. I think it's kind of trying to rally. We've had pullback to dirty end of trend on the weekly chart, the flush patterns and so on. I mean, I liked copper a while ago. We've had this kind of breakout here, but you can see the commitment of traders is just not supporting a breakout in copper. So I just don't think it's going to go that way. Crude's a different animal. Crude's a way of hedging USD. And we all need crude to power the economy. So, but copper, is kind of manufacturing based. If the manufacturing sector is weak kind of globally, then copper's going to go nowhere. And the commitment of traders on copper is just not supporting at the moment, at least, this kind of breakout in copper. So there we go. Quick overview of the global macro charts. I'm going to be very interested to see what happens next week. I think we could see an explosive move in the yen. We could see an explosive down move in the equities. And yeah, so be interesting. This week was a relatively quiet week, so I think next week's going to be a really interesting week. So I hope your trading's going well. Enjoy the rest of your weekend.